Good morning, everybody. Welcome to the Flow Show. Here we go again. Trading. Never stops, never ends, and that's why we love it. Morning, Kay. You have a good weekend, mate?
Morning, Ryan. Yeah, busy weekend. Been doing a bit of admin and stuff, but yeah, we're ready to start the week again. How was your weekend?
Yeah, not too bad, mate. Had a quiet one. Well, quietish one. It was just me and the missus because the kids were off at some hiking thing with the scouts. So yeah, we packed them off Saturday morning and didn't pick up to Sunday afternoon. So managed to get a line.
Oh, that's nice.
So yeah, just nice to spend time with the missus without the old sprogs hanging off our trouser legs. So yeah, very nice indeed. Right, let's get stuck into it. Plenty to be looking at this week. We'll start with some of the news that's happened already. According to China State News, State TV, China is looking to boost sales of vehicles and home appliances. This follows an economic meeting chaired by Premier Xi, who said we must encourage and guide a new round of large-scale equipment upgrades and the replacement of old consumer goods with new ones. So it looks like he's going to be telling everyone to buy a new toaster, new kettle, and everything like that over the coming months, which in China, if Xi says they must encourage, then it's likely it's going to happen. So we should probably look to see retail sales picking up a bit over the months ahead if it works. So again, part and parcel of trying to stir up the domestic economy. There's been some good news and some bad news on the relationship front, let's call it that, with China. Their Commerce Ministry says China is willing to work with New Zealand to implement a free trade agreement. But then the same department had a bit of a moan up at the EU for touting sanctions on Chinese firms that they say have been helping Russia or been involved with Russia to do with the Ukraine war. They said the EU move create negative impacts, the same for the UK as well, saying that recent sanctions create negative impacts on trade ties. So they're trying to make peace elsewhere down under, but over this side of the world, they're having moaned up about those sanctions that are being put in place. Over in Japan, a little bit of data out from services price index, corporate services price index, coming down more than expected year on year to 2.1%, but still just above that magic line for the BOJ 2%. PPI data from Spain this morning as well, showing another negative number, minus 3.8%. Was down 6.3%, so not down as much as last month, but still showing negative numbers, which will be feeding in to the CPI data. It seems like the Governing Council has been out in force last week. Well, they are every month, but Friday was a particularly busy day for the squawkers. ECB's Nagel says German GDP may stagnate in Q2 after a small drop in Q1. Says he's more comfortable with the current market pricing for an ECB cut and is confident we'll tame prices but mustn't move too soon. There's still lots of deliberations over timings. ECB Simca says a March cut is out of the question. The ECB can afford a less restrictive stance from the summer. ECB Stornoas says sees the first rate cut in June and only sees an April cut if the ECB gets the right kind of data, but they definitely won't cut in March. So that's two saying that March is out the woods, or out the question. Says Stornoas says Euro area GDP probably won't grow 0.8% this year, but the data suggests inflation will reach 2% in the autumn. Here's someone who does half favour March cut. ECB Centeno, one of the big doves over there, says the ECB must be open for a March cut, even if it's not likely. Says inflation may temporarily be under 2% this year. ECB's Muller says ECB needs to be patient with the first rate cut. He'd like to see Q1 wage data before moving on rates. says it would be a mistake to act too soon and then have to correct that mistake. It says wage growth is still higher than what we would like to see. The tanned one also speaking as well, saying that the Q4 wage numbers were encouraging. The Governing Council needs to be a bit more confident that this inflation is sustainable, and that Q1 numbers, if they continue to be encouraging, will be important. Does anyone over there know when they're going to cut rates, Kay?
Who so? Where so?
In the Eurozone, the ECB.
No. They know as much, possibly less than we know. So nah, they don't. The fact that the Dove send us to the March data is probably hinting that they would like to cut a little bit earlier, but the hawks are still. I'm not going to say in the majority, but they are still strong enough to keep it all very neutral right now, and for them to continue to push back a little bit. Is Lagarde speaking later this week, right?
I don't know.
Yeah,
I haven't checked.
later in the week.
Oh yeah, she's at. Is it testimony in Parliament or something?
Yeah, and perhaps he can give us a little bit of a hint. I'm not expecting too much from her as usual, but just giving us something to chew on, perhaps, because last intervention that she did in the media was a little less hawkish than before, but nowhere near turning completely yet to the Dove side. So yeah, she probably will still steer the course and be right in the middle of we don't know territory.
Yeah, she's actually speaking today in Parliament at 4 o'clock.
Yeah, I think so. It's maybe today, right? Yeah.
Yeah, I'll have to see what that meeting is. It might be a meet when she speaks in Parliament on monetary policy, the last meeting, or it might be a biannual or whatever she wants to do. I'll have a little look at that, see what the subject matter is, in case it's something like financial stability. Then we'll all go to sleep again. But yeah, I mean, for me, we know where we are with the data. Inflation is being a little bit sticky. Half of the ECB members are looking at wage data. They want to see Q1 data. Some even want to see Q2 data. So my magic marker is still circling around June, July for when they might start to cut, or at least maybe start to indicate cut. But that's getting pushed further down the calendar. The more the data comes in sticky on the inflation numbers. But yeah, my base case is still maybe June, July. But I may be starting to push myself out towards August. I'm certainly not going to jump around like most of the banks do with their calls anyway. As you know, we've got far better record here at ForexAnalytix, at ForexFlow, at calling this stuff than any of the banks do. Over to the Fed. Fed Williams says rate cuts are likely later this year. He says his overall view of the economy basically hasn't changed based on one month of data. Says inflation can be a little bit bumpy on the way, and that term bumpy, I've seen a few central banks using that term now to describe these upticks in inflation that we've been seeing here and there. So expect that to maybe become official language now. Bumpy. It's not going to be an inflation uptrend. It's going to be bumpy inflation. Speaking of central bankers appearing before their bosses, Powell is going to be appearing before a Senate panel hearing on the 7th of March. So that's next week, but to keep in the diary. Again, this might be his semi-annual thing that he does in front of both financial committees, banking committees, all that sort of stuff, where usually he just repeats the last FOMC statement. But there have been times when he's dropped the odd line in that we haven't heard about. So that'll be watched with much attention next week. Not a lot on the headline front so far today. Looks it's a bit like markets at the moment, not doing an awful lot. Kay, anything on your agenda?
That I've seen over the weekend? No, I wasn't sure whether to believe any headlines about possible ceasefires here and there. I was trying really to clutch at straws this morning to find a reason for the moves we've seen. Better euro this morning. I've got the impression month-end flows may have started, and that's what we are going to watch as well in the upcoming days. No, for the rest, extremely little, at least market moving that we've seen, right? There's no, I mean, it's very quiet on that front.
Yeah, very quiet indeed. And the vol's not looking too hot at the moment. We were seeing vols in euro dollar last week down in the 5.4% area, which is not very good at all. But that's part and parcel of trading. You've just got to adjust your trading strategies to match that. We do have some data coming up tonight. I'll go through the data calendar, what we've got this week. Where are we? Have I lost it? No, oh no, here it is there. So first things first, Japanese CPI coming in tonight. So that's going to be a big watch. We're expecting core inflation to come in below the Bank of Japan's target, as Ueda has been telling us that it's going to do into the latter part of their fiscal year. So this won't be too much of a surprise for him. Whether, if that number is confirmed, whether that gets the yen pairs moving higher a bit on the fact that they'll think that the BOJ might take a little longer to end easing. I don't know. Certainly, if it's hotter, if it stays above 2.1%, we could well see a reaction in yen strengthening as one of those boxes get ticked for the BOJ. But the way it's moved so far on then things like data and the wage negotiations and the jawboning, Kay, is this one going to move the market at all?
It has the potential both ways. But again, like I've been saying here, and we've been talking about it, I don't think it will change anything to Ueda's plan, unless you get a 1.5% number or so, which would be a real surprise to the downside. But yeah, I think for the sake of the yen to not weaken too much, it should come out above 2. If it comes out 1.9, 1.8, that is just going to keep the market in that zone where everything is going to continue as planned, but very slow. There shouldn't be a surprise that it comes in below 2%. We've seen raw materials, we've seen commodities, oil and gas coming off, which all, because they import a lot of their inflation in Japan. So that should not be a surprise. It comes off, and as Ueda told us already that he was expecting this, it should not really change much to the yen either. What it could do is just continue to give those Japanese Nikkei and Topix buyers more food and more meat on the bone to chew. So I think it could have an impact on that side, and then per correlation, an impact on the yen again if that would be the case, But to the overall situation, I don't see it change that much.
Yeah. So yeah, as Kay says, probably it's going to be a move on magnitude of how much it misses or beats the expected number. But if it does drop below 2%, they'll want it to, or the market will want to see it picking up over the next few months, won't it? Into the end of the fiscal year and spring.
I would love it. They would love it because you would love it for knowing what the Bank of Japan will do. If we start to print numbers consistently below 2%, then I fear a little bit for the yen, because that may because we have seen those GDP numbers as well. I think those are going to be very important as well. The Q1 2024, which is their last quarter of their 2023-2024 fiscal year, that should peek its head back above the zero line, yeah, back into expansion. Because if you start to print numbers consistently below 2% on the CPI, then the market is probably going to expect the Bank of Japan to be even slower with the normalization than some people may have expected, and then you may start to see a bit of pressure actually starting to build into the JGB market again. People may those whales may decide, they are not going to take us too far, so we are jumping back into the JGB market and buying JGBs. You're putting downward pressure on the Japanese yen. In the process, that is a possibility if we continue to print below 2% on the CPI.
Yeah, thanks, mate. Well, let's see what else is coming up this week. We've got some housing data from the US coming in. Some regional manufacturing surveys over from Dallas. Home price index stuff tomorrow, as well as durable goods. We also get US consumer confidence. This is the conference board number, not the Michigan number. So that'll be watched for what's going on with the US consumer, particularly after those soggy retail sales. And we'll get to see the inflation expectations there as well. RBNZ in the early hours of Wednesday morning. Will they hike? Will they cut story? We'll find out one way. Sorry, will they cut? Will they hike, or will they stay on hold? I should say. We'll find out one way or another. Some raised expectations for hikes in that one. Economic sentiment from the Eurozone. These are all the. This contains the consumer confidence final number, but again, this one's important for the selling price expectations, those inflation expectations. That's important for the ECB. Then we get some GDP data from the US. I can't remember what number revision that one is. Is a second revision, or is it the preliminary? Can't remember. Because they have about three goes at guessing this one. Is the what?
Second.
It is the second one. Yeah, I thought so. Yeah, we had that the other one. So we'll see. This one's been a bit jumpy recently, the GDP numbers. They have, usually they don't have that much of a variation between the revisions, but the US numbers have been quite choppy. So that'll be something for the dollar to look at in that front. Then on Wednesday, we get some further data from Japan. So that's all going to go into the picture, particularly retail sales, industrial production, go into the GDP pot at least. Wednesday, get some retail sales numbers dropping in Australia and Germany. We get to see whether the consumer has perked up a bit or not. Then we start getting some further CPI numbers, GDP numbers from La France. Anything to note in these GDP numbers from the Swiss on Thursday, Kay?
Well, I think we have a bit of numbers out today. We've got those GDP numbers. They came in a bit, I think, preliminary or so readings were, if I saw that correctly, were like a bit sluggish. But retail sales last time were not very good. Yeah, the data in Switzerland have been on the back foot a little bit. So that is going we are going to continue to watch what's going to come out on the Swiss data, because as people know by now, I hope, we have an SMB meeting on the 21st of March, and they only do one every quarter. So I guess whatever comes out, if the numbers remain a little bit soggy, there may be quite a bit of speculation on that SMB may actually do something on that meeting. Again, not completely the base case, but it's enough for sometimes, for expectations to ramp up a little bit, for speculators to stick their teeth in it, look at the weak side, and start to sell a currency ahead of the fact, which, by the way, could be the case for RBNZ as well, and that's tomorrow night for us, right?
Yeah.
Tomorrow night, yeah. Perhaps we should tomorrow have a close look at what what the expectations are there, because it could really have an impact on the currency.
Yeah, very much. Yeah, we'll do that tomorrow, certainly. Just an FYI, these CPI numbers, these are the new month flash numbers that are going to be coming in. So we also get the regional German numbers as well, which culminates in the main headline number coming in later on Thursday afternoon. Then we get, it's PCE on Thursday. PCE on Thursday? Yeah, PCE on Thursday with the personal income and spending numbers there. So that's going to be the big number watch for the US. We get some GDP data, Chicago PMI on Thursday, and then not a lot else after that. Friday, it's the final PMI days from the Eurozone. And also we get the ISM manufacturing coming in as well. So that's going to be another big number. Eurozone flash inflation as well is going to be pretty important to see what's happening for the ECB on that one. So quite a busy end to the week. Not too much at the beginning of the week, but certainly we finish with a bang. No jobs report on Friday. They don't tend to have a jobs report when the first of the month is actually on a Friday. So that'll be next week, the 8th. That's when we'll get the US jobs numbers. So plenty of time to get ready for that one. So that's our data calendar this week. Plenty to get our teeth stuck into. As I say, should be a fairly busy end to the week at least if we get some decent numbers in there. Anything else that strikes you coming this week, Kay?
No, I think we've covered most of it. As you say,
how's the auction landscape?
Yeah. Oh, yeah. Very good. It's a busy week. It's a very, very busy week. We have, and it starts actually today, which could be seeing a bit of a mover, especially coming out of a few weak ones at the end of the week last week. So we do have 2, 5, 7 year all. Look, we have the 2 and the 5s today. And then we have the 7 years tomorrow. So that for the notes side. And then in the middle of it, we have like shorter term bills today and tomorrow. So those are the 2 days where those auctions will take place. They're pretty hefty amounts. There's a very good total. I think it's somewhere close to 170 billion in the notes between today and tomorrow. So that may see a bit of a move on the yield side. The interesting one, perhaps more interesting one, is going to be the 2 year, to see if we get we're turning around 470 right now, which is not too far away from the dots. If those auctions make it move away from those levels, it may have like at least a short-term impact on the dollar, and that is going to be after our fixing time, right? I think it's 4:30 our time. That's where we do the notes normally. Yeah. Okay.
2 at 4:30, 2 at 6 o'clock.
Yeah, that's the one.
Yeah. So those are those there. So yeah, in a otherwise quiet market, if you're trading, keep an eye on those times. You might get a little move coming in there. We'll start with yields then, as we're looking at those auctions. We had a little bit of a flop out on Friday. We were 10 years were creeping well up towards that 4.4%, call it 4.37, whatever you want to call it, up near this previous area where we run into a bit of traffic. We've now come off again. This is still your important line, 420 for 10-year yields. If we're holding above there, that's is going to keep a little bit of underpinning on the dollar, particularly in something like dollar yen. 2-year yields as well were having a creep up. Keep an eye on this one to see where, as a rough guide as to what's happening with expectations in the bond market for interest rates. We were sitting around the 3 dot mark, as Kay mentioned. If we're pushing higher, getting washing out a few more, 1 or 2 more dots, is looking a bit more hawkish in the bond market, but that's had a little bit of a pullback as well. Still pretty clear trend, at least for February, so yields are still rising. There's no real reason why yield should collapse unless data collapses or anything like that. But it might just be a bit of a slow grind high again. It's going to be the data that's going to drive it, but you're going to get maybe some squiggles going on amid these auctions if there's anything funky going on in there. So look at those as well for those auctions. Right, all else being equal, let's have a look at a couple of bits and bobs. Euro dollar had a really tight Friday price-wise. Let's see if we get something a bit more today. Still mess around in my zone. Levels are still the same for me unless we're getting up above that zone and taking out 109s, 109.20. Then I see us staying a bit contained in this one. Downside, big figures holding for now. Got that secondary line down around that old fib. Call it 107.90. My other level below there, 107.60. So while we're above that, it's keeping this again. This bounce is keeping it in play. If we start to break below there, it's going to look a bit shaky. Definitely below 107.60. This bounce is going to look even more potentially dangerous for another move down to 107. If we go down there again, it's going to look like this trend is going to be continuing. So it's not out the woods, the downside, despite the quite significant hold down here, but it needs to do the upside job to push away further. From there, cable, Ali, you're fishing around in cable, long 126.97. Again, keeping this short-term uptrend going as well, a bit similar. Keep an eye on this though. We just made that high in the 127s there, and we just made a little high below that, and we may be making another lower high here. So just keep an eye on that, at least for the very short term, because if we can't break above there, then you might get a bit of a steeper pullback. But where that goes to, I wouldn't suggest we're going all the way down to 125 again, but we may come down toward that 126 area. So keep that one on watch. Just going to have a quick look at S&Ps, because it looked like we might have been off to the races again on Friday, but we saw some pretty decent selling after we broke to that new high up here in the 51s. So it looked like we were making a break of that 51 area, but it ran out of puff pretty quickly and got sold quite heavily into it. But this 50-80 area is doing the job for now. It's a very short-term level. It only showed up after we made that initial high just below 51. That's where we pulled back to, and we've tested it and tested it and tested it and tested it. So this is developing now into a bit of a level. As I say, it's still very short term, so I'm not going to trust my life on it. But it does keep this move in play, and we need to see whether we're going to make another break through 51. If we do, then we watch this high up here. So we've got you're going to have three levels to look at now. 51 even number just to see, or this 50, 96, 95 area to see if we're going to hold it again as we did before, or are we going to go for the highs? And if we don't get as far as the highs, then again that's going to maybe signal a bit of a top. But sellers and shorts who are getting up here need to get below this 50, 80 level and stay below it. Do that, then we go and have a look at the 50, 40, 50, 50 area once again. So all you top pickers, you got a little bit of evidence up here to maybe look for short, but it's still with the bulls at the moment until that price picture builds up a bit more. Kay, did you want to have a little look at anything?
I can. It's a bit of a quiet one this morning, but I can have a look at a couple of things. I was actually going to have a look at that cable as well, because there's been it's been interesting, I think, in the fact that some levels have been visited and then rejected at certain times. And I'm going to go on a shorter time frame just to show what I mean. Look at where the top was here on on Friday around 127 the figure, and that was very close to fixing time in London. So I guess is that month end, because we know that a lot of people are hedging their stuff much more dynamically now, not waiting for the last 1 or 2 days. That makes all those model readings a bit more difficult for this month. The logic would want that we're seeing a bit of dollar selling, perhaps a bit of yen selling as well, because we are at new highs in the Japanese equity market. So based on equities, we may see those two currencies suffer a little bit into month end. Also, we have seen Swiss franc being bought over the past 3-4 months. So that's another one that I'll be monitoring, perhaps for again a counter trade comes the end of the month or so. But in my opinion, there must be a few sellers up here right now in the waiting in cable. We had this peak above 127 and rejected. We had another peak at 127 and rejected again. So it's kind of interesting. The fact we went there, when we went there, and then the rejection. All right. And also the reason I think that we are seeing a bit of month-end influence already, especially this morning in the euro, I'd say euro crosses. We are still very much in the range in euro sterling, okay? But then this morning again, and we've seen it on many euro crosses. We've been pushing higher. We're still, of course, below that 70-80 zone in the euro sterling. But I was just looking at some of those price actions, and we've seen the same on the euro CAD, the same on virtually all euro crosses. One that stands out obviously in this whole scenario again is euro yen. Euro yen has really been pushing higher, and apart unless we get like a surprise out of those CPI numbers tonight, I'm going to suspect that we may continue to push into month end. And although I'm very seldomly looking at what the cloud is doing in anything less than 4 hours, I've got to note that since the beginning of this month, since we've broken back above, the cloud on the hourly on the euro yen has been doing a bit of a job. We never stayed below, we never stayed inside. It always rebounded as well. It's of course yen related. It's of course the market screwing back on speed of yen normalization. Look at where the JGBs are trading, back below 70 BPs. That's not a very good news for yen either. That should really tick higher if the market expects the Bank of Japan to normalize, to hike rates more aggressively. It's not. So okay, this is also one thing that is weighing right now on the yen. Yen will always move with the rest of yields as well, the US 10s and stuff on differentials. But the fact that this is not going higher is also a little bit of a warning signal to me that the Japanese are still not buying the fact that Bank of Japan is going to normalize fast. So keep an eye on this one for as long as we hold above 161, 80, 90, we are well above, but already 162 and a half, 162.80 or so. There is a possibility that this pushes on, okay? All yen pairs, I'm going to say. But I found it interesting today is that most of the European crosses were bought in the morning. So I guess, I'm not saying we are there, but I'm guessing that some end of month stuff is already going on as well. Because if you look at stuff like the Euro commodities are also quite a bit higher. You look at stuff like Euro Aussie, for instance, is actually getting quite close to the top end of the channel here, which comes in around 166, the figure. All right, so keep an eye on that one as well in the Euro Aussie if you're trading those kind of things. And then really the last one for today, because this one I've been talking about it, and we've been talking about it, is that stuff with the rand, and the rand really is not finding any footing. Okay, we are again trading against that trend line here. Unless there is anything going on, like really risk on, really something going on better as well in China, for instance, or things getting better on the geopolitical front, I'm still looking to buy dips in this one for now. I don't like to go and chase it, but I would not be surprised if we go back to at one stage to test those October highs at least. Around here. This one would be really quite big if we get back up there. But watch out if we start to break above 1940, okay, on the dollar end, then we could have like a quick 1.5% more to the top side. All right, for as long as we hold the low 19s right now. And really, with that, Ryan, I think it's that's good enough for our Monday.
Yeah, thank you very much, mate. Yeah, I've not got much more to add. So, yeah, apologies, folks. That's just the way markets are at the moment. Not an awful lot going on. So not much to talk about. Very tight ranges. But as I say, hopefully things will pick up over the course of the week. We'll get some headlines and whatnot. So do your homework, get your charts ready. That's always good to do on a Monday. Just plan where you'd like to trade if we're going to see tight ranges. Keep an eye on the wider ranges in case you get the odd outside move like we saw last week. But have a great day, everybody. Have a great week, and we'll see you all tomorrow. Have a good one, guys. Cheers, Kay.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.